Hey guys, spiritual living on this channel is for educational purposes only and is not intended as financial advice. Let's take a look at some charts on this rainy afternoon in DC. So I've been really fixated on this VIX stuff for the past few weeks now. The trend has been when we get spikes in the VIX, historically for BTC since 2013, it has been a decent long and short term buying opportunity. This wasn't obviously a long term buying opportunity, but year over year or year over 2 years, it worked out. This one, excellent buying opportunity. So far, this one may be shaping up to an excellent buy opportunity. This is the VIX right here, and you can see, I'll show the full chart on the next chart I have, but obviously big spike up historically near all-time highs, closing at all-time highs, that sort of thing. This bottom one is BTC versus SPX correlation, essentially at 1. We can say and we can think that it's uncorrelated, sure, over time. It goes in and out of being correlated with SPX, Dow, NASDAQ, etc. But right now, since February, we've been extremely correlated to SPX. So any moves in US legacy market or US traditional markets related to coronavirus or this disaster relief package, whatever that is, that's all going to affect us in the near term just because the correlation is so high. So here's VIX since 1990. Now in 2003, 2004, they changed the formula. So you can't really compare it to way back when, but you can compare it to 08, I think, pretty fairly. You can see we're getting there. I think it actually closed. This might be weekly closes, but the daily closes definitely closed higher than 60. So historically, we are in an interesting time in that department. So going to crypto fundamentals, this is the Puel multiple. And again, this is all these fundamental charts are from lookintobitcoin.com. Great site for updated versions of this information. So this is just a way of looking at coin issuance currently versus coin issuance over the past year. And historically, dips in this metric have been buys. So inverse to the VIX, for example, dips in this metric have been buys. I'm going to talk about MVRV, which is realized cap and market cap related. Dips in that has been a buy historically. So I like what I see from this perspective, and I like what I see from the perspective of looking at all this stuff together. Now, you could say, well, Josh, it just shows the same stuff in a different way. And that's completely true. So it's hard to say okay, all this stuff agrees with each other, but does it really matter if none of it matters? If none of it matters, then it's all wrong, right? You just have to think. I'm thinking to myself, it's worked out since the past 10 years. I can't just assume it's not going to work this time, regardless of the macroeconomic situation. So far, we dipped into the buy zone. We didn't hit the maximum low, which could certainly happen post-halving even. I don't know, this whole daily issuance thing is really going to change post-halving. We have a negative 15% difficulty adjustment. So this is difficulty on line and on log. And you can see historically, we don't really go down in difficulty. Historically, it's just been up, 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 up. This will be the third highest drop ever. And if we look at since when did we have big drops? So this was November 2019, and then we really didn't have anything December 2018. Again, like I talked about in the last video, difficulty, hash rate, block time, issuance, halving, all this stuff is related to one another. It's a living, breathing, dynamic system. So as hash rate slows down before difficulty adjustment, block time increases. As block time increases, the halving gets pushed back. So this will adjust again after this difficulty adjustment in the next 12 hours or so. But currently it's the scenarios BNC is calculating somewhere between May 11th and May 18th. So it's still mid-May. Not really too much of a pushback from the initial May 7th, late April calculation. So this is MVRV again, market cap, realized cap. Just like the Puel multiple, we dipped into the buy zone like we have in 2019, 2015, 2011. 2011, we overshot it. Each time we've kind of overshot. So maybe that's where we are headed to the lower bound. But right now the MVRV currently looks good. So it just says that our realized cap, or the on-chain stuff, is actually moving fairly well relative to the market cap, as in, this is oversold based on economic utility. Now looking at some MA stuff from like a fundamental, like high time frame thing. This is one I didn't show last video, but I like it looking at it now. You can just see just off the bat, buy zone, sell zone. Certainly the sell zone and the buy zone can be months. So this isn't like a low time preference or a day trading sort of thing. This is okay, we're in the buy zone. This is where I just DCA or I just nibble. We're in the sell zone. This is where I DCA out. I sell a little bit every day, that sort of thing. Nothing's going to predict the exact bottom, exact top, but you can look at historically, what have the moving averages look like when we bottomed, when we topped. Right now we are below the 730. I think that's what this is, MA, 2 year. So historically that's been a buy zone. Comparing that to the 200 week MA, again, historically, we've been in buy zones when we've been this low or tapped the 200. Now we can look at that at a few different ways. This is the BLX. If we look at the 200 EMA, which is the red one, versus the 200 MA, the white one, we can say, at least I can garner a few things from this. So the difference between the EMA and the MA is just the EMA takes into account the most recent data and weights that data higher than data that occurred 200 periods ago, whereas the MA just averages everything together. So you can look at crosses on the 200. You can look at MA, EMA, difference between buy zones, sell zones, as far as distance from the 200 versus tapping the 200. Very similar to this 200 week, even this 2 year multiplier. Very similar stuff. Again, it's in buy zone territory historically. If we look at the 100, this is on the weekly chart again, EMA versus MA. We can look at crosses this time. We can say when the MA is above the EMA, that's bearish. When the EMA is above the MA, we're bullish. Bearish, still bearish, trying to get bullish. So as we range heavily in multiple weeks, we're not exactly trending on high time frames. Technically, we've just been in a range for like a year. So it's going to be harder for these EMAs and MA crosses to make sense, even on 5200 on the daily. They're going to be all over the place. We're going to have death crosses on everything right now. But again, this is just another metric to look at, just to show, okay, are we bullish on the 100? Yes, but are we above the 100 MA, the white one? No. So it's like, macro wise, we're getting there, but we're definitely not pull the trigger in my mind. And if we look at logarithmic growth curves, this is probably the scariest one. Just like the pitchfork, we're below the lowest bound historically. So what does that mean? Is this invalidated? Do we add another rung here just for this data? It's hard to say, and I don't think we'll know until we can retrospectively look 6 months to a year from now and say, okay, if this goes back to the median line, whatever this is, or whatever it will be, it's 22,000 at the moment, but until we get more data, it's hard to say like this is an outlier versus this is included in the data set, right? So similar to the pitchfork, this stuff was all out of the pitchfork. So it's like at the time, what do? Do we invalidate it? Yes, but then, oh wait, it went back to the pitchfork, hit the median line, perfectly got, supported by this outer bound arbitrarily that I made, again, retrospectively. But this whole time, the median line is there. We went above it, we went down below. The median line is still there. So the question is, in a couple months or a year, do we go back to this median line, very similar, 22,000 plus or minus 5,000, whatever it is at the time. So if you're looking at like strict rules, you'd say, okay, the pitchfork is invalidated. It was invalidated here, but it's hard for me to do that when I see this magnet-like median line continue to act the way it should, So it's hard to let the pitchfork die is what I'm trying to say, guys. Stock to flow, again, this looks like it's completely blown out to me, but historically it's been below the average. I think the question is, if the average goes way up and we're still at like 10K, the average is at like 90, do we just throw away stock to flow at that point? you know, that's, I've never been a big fan of stock to flow, but I can't hate on stock to flow when I have things like a pitchfork and EMAs and stuff, because it's all the same stuff. So in general, the stock to flow model is expecting a rise over the next year, you know, based on halving, based on coin issuance, that sort of thing. Looking at Tether, we haven't been able to drop below $1 or even get anywhere near it. There's been a slight premium on Tether ever since the drop, partly in reason due to just demand for Tether. You know, we got this massive demand spike as we spike down, which makes sense. Just logically, people are going to the safe haven. But since the bounce, I would expect this, you know, I'd expect Tether demand to decrease as price goes up because people are going back into BTC. But that hasn't really panned out. I mean, the premium has certainly decayed or dropped, but it's not, you know, there's been no yellow. It hasn't been below $1 since the initial spike. So this could be liquidity issues. This could be, we're still technically bearish based on this. If you're into the supply demand of Tether theory, not really sure. And if we look at just Tether issuance, so this is USDT on ETH or ERC20 USDT versus Omni USDT versus USDC. And since March, I mean, since, what is it for ERC20? So since mid-February, ERC20 has just skyrocketed. What is it at now? Almost 4 billion. USDC, almost at 700 million. So it's at all-time highs as far as supply circulating. So there's definitely been a massive increase in stablecoins over the past month. Kind of unprecedented, I think, other than times like this. But this was, a lot of this was eventually swapped out, you know, as Omni got expensive and slow and ERC20 ETH became favorable. That's what a lot of this ended up being. I think the USDC is more clear though. You know, it's ranged for a year and then all of a sudden it just print. So there's clearly a demand for stablecoins here. All right, let's go full technicals. Weekly cloud, again, just looking at it, snap judgment in a vacuum, mega bearish. Below the cloud, cloud is bearish, lagging spans, below the cloud, below price. These are all the things you're looking at as far as the cloud checklist. One thing I'll point out on a few charts in this video is the flat Kumo equals magnet theory. So cloud draws based on highs and lows of the previous periods. So when you get an established range, you get this 50% zone that just is flat. So long as we don't get lower lows, it doesn't change. Doesn't change until eventually price comes up to that level, or you get the cloud twist. So down here, when we were in these doldrums of months of accumulation, we were talking about looking at this flat Kumo thinking, okay, this is possible on the weekly. Always sounds crazy when you're down here and you're thinking of whatever percentage move this is. Very similar to here. Again, sounds crazy that we're going to hit 11.5 again, but that's what the cloud wants based on the established range. This is a 50% of some high and low. This will hold so long as price does not make a lower low. Eventually, maybe 6 months from now, this will flip to a bullish cloud. So that's a conversation to have at a later date. But right now, the target is 11.5. And the near-term target is probably like 8.5, 8.7. Just looking at the Kijun, which is another example of a 50% range, especially when it's flat. You know, the Kijun stayed flat this whole time when we went up and we came back to it. We snaked in and out of it several times. It's still flat. So that's, again, another level that price really likes to come back to. Just equilibrium, mean reversion type stuff. And if you think I'm crazy and you don't believe me and cloud is hogwash, you know, we were talking about, me specifically was talking about flat Kumo equals magnet type stuff when we were in these doldrums, multi-year, okay, it wasn't multi-year, it was a year of sideways Wyckoff accumulation in retrospect, but this stuff is possible. In my mind, it's highly probable. As long as we make a range and we hold it, we're going to try to retest the 50% at some time. You know, this took probably another year. So October-ish was the edge entry. Took a little less than a year to eventually get there, but it was a long, you know, this is like a 200-day ascending triangle pattern here. It was a long process. It doesn't happen overnight. So daily cloud, again, much like the weekly, bearish on everything. 7.2 is the level here. Again, the Kijun is flat, cloud is flat, Kumo is flat. I really don't feel comfortable entering a trend type long where I just buy and hold until we're back above the cloud again. You know, here we got this muted bullish rally and then the world fell apart. So we'll see what happens. You know, if we get back up to 7.2, I think it's pretty clear that this move down was a little bit much, kind of driven by derivatives exploding, basically. You know, market makers on derivatives exchanges exploding. And this move down was like three things. It was miners exploding, Tether possibly exploding, and then traditional markets exploding. So it'll be interesting, you know, what happens at 7.2 once we get above this cloud. If we do we get another rally? Is it too soon? I mean, it's probably too soon. We probably need, you know, this was 3 or 4 months. So we probably need 3 or 4 months, especially post difficulty adjustment. You know, you can look at that as well. I saw some charts on that. People comparing the negative difficulty adjustment periods for the month and how long it's taken to basically break the accumulation. And it's been, you know, 3 months, 4 months, 6 months, 8 months. So this could be a while before we actually have another bullish trend. In the meantime, low time frame, you know, full disclosure, I'm long BTC and ETH here. This is what I'm looking at. Now, I fully am aware that this 8.7 target is ridiculous. Even 8K is a bit ridiculous. So this isn't an expectation as much as a possibility. So let's break down what I'm looking at. I'm looking at the cloud mainly. So I'm looking for a bullish Kumo twist, which hasn't happened yet. Now, the number 4, the lagging span stuff, that's less important, but it's another part of the checklist that you can be confident in the probability of the outcome. So right now we just have a garden variety Kumo twist, still waiting on this, Kumo breakout, waiting on this Kumo twist. Now the Kumo twist will happen over time, and then we're going to burn off this resistance, even if we stay sideways. So eventually we'll just zero out the cloud, which may be what we need to happen. But if this does break to higher highs, the cloud will twist fairly quickly, especially on the 4 hour. Another thing I'm looking at, volume descending. I like that from a chart pattern perspective. Now you might say this can't be a cup and handle because it's at the bottom. Cup and handle is only continuation. It's never reversal. That's fine. I don't care. I'm going to pretend it's a cup and handle and trade it as such. So the 1618 is at 7.8. This maximum target, obviously 8.7. The daily 200 is at 8.2, something like that. The yearly pivot is at 8. So there's tons and tons of resistance on the way up. This is essentially just a gap fill trade if it does happen. You know, I'd expect us to sort of, you know, if we're maximally bullish, I expect us to pause between 7.777 and 8K, something like that. And real quick, just looking at futures, we're still in backwardation. There's a massive futures and options expiry Friday. So we'll see if we're still in backwardation. So this is ETH here on the right side. This just means that futures are lower than spot, and that's a bearish sentiment just in general. If you look at my favorite CME futures contract chart, you can see 27th expiration. Typically, these expirations are highly volatile. Typically, we sell off into the expiration if we're bullish, and we don't necessarily, you know, rise into the expiration if we're bullish historically. So we'll see if we break that trend here. Certainly possible. And just back to the options thing, we have 50K BTC options expiring Friday. Thanks to Skew for that data. See the big spike here. All right, let's move to ETH. Again, same principles apply in a vacuum. If I'm looking at the cloud, highest time frame I can on the weekly with the most data. What am I looking for? I'm looking for this edge-to-edge trade. What are the triggers for that? Are we in the cloud? No. Do we have a bullish TK cross yet? No. And the target is always going to be the other end of the trade, other edge of the cloud, regardless of the craziness that this, you know, 750 from 100, a 7x or whatever it is. That sounds insane, right? I'm just looking at what the data is showing me. So we have this range. We established a high and a low. This is the 50% of that range of some fib or whatever you want to, however you want to think about that. I expect 300 to 400 to be a massive resistance zone on the way up. If we get there, obviously I'm not going to just long this blindly right now, thinking it's going to go to 750. But I think DCA into ETH is certainly fine at whatever levels you're comfortable with your risk profile. And looking again, flat Kumo equals magnet, this just solidifies the edge to edge stuff for me. Why 50% retrace and Dow theory, you can look that up. It just says historically everything retraces 50% or has a high probability of retracing 50%. Daily, again, much like BTC, flat Kumo somewhere around 190, cloud somewhere around 190. So really don't feel comfortable getting into a massive long position until then, just because if macro is bearish and you're trying to long, you're counter trend trading. So that really isn't like a higher time frame trade congruence there. It's definitely lower probability. You know, it's higher probable if you're macro bullish, you're low time frame bullish. Again, death cross on ETH 5200. Looking at the pitchfork for ETH, if we add a rung and we say this is the bottom, 338, 350, eventually something like that would be the target going forward. I can easily see this Adam and Eving as well, and Eve comes down to around 115, and the projected target would probably be a gap filled at 200, something like that. That's weeks away, I think, but it's something to watch for. And near term, this is why I'm long ETH, because of this edge-to-edge possibility. So we broke into the cloud with a bullish TK cross, and you can see there's this bite out of the cloud. We're below the cloud now. The question is, what are the rules here? Do we close the trade? What do I do? I'm just holding it. I think stop loss at the Kijun is fine for these type of trades. Target's 170. Again, this is like, 30% move, right? 27% move. That sounds insane. Again, you can sort of call a cup and handle type trade with this descending volume profile, call it a gap fill trade, call it whatever you want. It is a counter trend trade, so it certainly has a lower probability of working out, but I still like it. I still like the probability here for that one on ETH. And then lastly, just looking at ETH BTC, it's just sort of, died off to cause a doom here, back to this high VPVR level zone. So in the near term, ETH BTC looks like a junk heap at the moment as all the trend metrics flip bearish. It flips below the high time frame support resistance line and is just going to retest this VPVR level at 020. That's all I have for this one. Like, dislike, comment, share, subscribe, and hit me up on Twitter, and happy trading.